Hello and welcome to our Minds and Money 5 at 5 show, which this week is sponsored by Dundee Goodman and is also held in association with the Resource Global Network. Those of you attending 5 at 5 for the first time, the game is 5 guests at 5 p.m. and in this case 5 p.m. London time to maintain engagement between investors and miners through a lively interactive format in the current situation. Do admin announcements before we start. If I can please ask you to have your video switched on at all times. If you want to submit a question, there's a chat function at the bottom, and you can ask your question via there. Or you can also ask your question live by waving your hand virtually on the invite participant function. We've got a really packed program today. This week's show has a Canadian theme and is hosted by Rob Dixon, who has 20 years of international capital markets experience. Obviously, extensive global relationships helps Dundee Goodman maintain relationships with like-minded investors globally as they seek financial partners in the investments that they make. A warm welcome to Rob Dixon.
Thank you, Andrew, and I hope everyone can hear me well. I just wanted to say, Andrew, I actually want to see you pour that drink. It's 5 in London, so for all the Canadians out there, happy Thanksgiving, and I hope you all have a wonderful weekend. This panel has Joe Hamilton from Unigold, Galen McNamara from Summa Silver, Max Sali from New Placer, Mark Ashcroft from Aurelius, and from sector investment managers, Angelos, Damaskos. I just wanted to say that why this panel? This panel is being put together because it's a bunch of news stories. It's names that many of you don't know, and it's names that we're very excited about. We're going to focus on junior names. All have recapitalized in the last 6 months. All have recently had success through the drill bit, and we think they all have a lot of upside. In terms of why we are doing this, in terms of the opportunity, I think there's a lot of names here that investors have totally overlooked and don't know. That people don't know a lot about. In terms of our outlook at Dundee, we're extremely bullish on the space right now, and I think that this is a great opportunity for you to see them. I wanted to hand it over to Angelos Damaskos for an introduction in terms of himself, but also, we're all curious about the gold price right now. We're all curious about where we're going in this market right now. So perhaps, Angelos, at this stage, I'll hand it over to you to quickly give a quick overview of your view on gold, but also on your favorite stock pick, because obviously this, for the viewers, is an opportunity for people to get acquainted with that and to learn a little bit more about what you're thinking right now. We'll come back to the rest of the intro in just a moment.
Thank you, Rob, and thank you to Minds and Money for hosting this event. It's always very interesting and very exciting to join a panel to discuss some names that we follow and we like. In terms of who we are, we are a relatively small size, I would say, asset management firm, and among our funds that we run a precious metals fund called Unigold, which, as the name suggests, focuses in smaller capitalization, earlier stage or advanced stage, I would say, exploration and development companies. And we have been involved in the space for over 20 years. We have been through the previous very strong bull market of early 2000 to 2011. And we have waited patiently for 7 really dark years of bear market for this new upturn, which has come, with a certain set of unexpected circumstances. But we are not dancing, on the world's misfortune with the dreadful pandemic. But we believe that gold and silver serves the purpose of offering a store of value and a safe haven to investors. And this is why many investors are increasing their allocations to gold-backed ETFs and also to gold mining equities. Under the circumstances, I think we have rarely seen such supportive conditions for gold and silver. We have, on one hand, the weakness in the global economy, which the governments have to support through these bailout programs, or if you like, sort of like support programs for the furloughed and the unemployed, as well as ailing businesses. But the reality is that there's so much money being printed. At the last count, I assessed the announced programs account to more than $15 trillion, which is a mind-boggling amount. And because the interest rates are so low at the moment, governments do not hesitate the least to launch another mega billion program or trillion program to support the economy. The result of that is that the indebtedness of the world is increasing very rapidly, and it's increasing at both the public and the private sector level, which makes it extremely difficult for the central bankers to raise interest rates. So we expect interest rates will stay at zero or perhaps negative levels for many years to come, particularly as the economy struggles to recover from the effects of the pandemic. At the same time, there is the possibility of inflation rising. Many companies are trying to push the cost of the pandemic and the lockdowns to consumers, obviously in an effort to stay in business. And the Fed has actually announced that they are willing to allow inflation to rise to the higher level of their expected range. And they have a motive to allow to do this because it will erode the level of debt. So we have the two key criteria that are supportive for precious metals, particularly gold and silver: low interest rates and higher inflation. So with this backdrop, I think it's a wonderful environment for mining companies to plan their projects and accelerate the production of promising projects that will add to the growth of the industry. And we think that we are in the early stages of a major bull market for gold mining equities. Now, as we were discussing a little earlier, in the last couple of months, we are seeing a little bit of hesitation, a little bit of profit-taking, some pullback in some of the equity prices. But we must not forget that we have put in a lot of value since the beginning of the year. And typically, the early stages of a bull market are powered by speculators and specialist investors who understand the space, who follow a number of companies, and are very quick to react to a new upturn and increase the capital availability. Now, these people are probably moving some capital to the sidelines, waiting for this turbulence to pass, waiting to see the effect of the oncoming US elections, and perhaps biding their time before they step in. We believe that the next leg of the bull market will be powered by the generalists stepping into the sector, who have missed out in the last year or so of bull market, monitoring the situation and unwilling to take too much risk. But now, with this sort of consolidation phase, if you like, it gives an opportunity to the generalist investors to increase their allocation to the space. And it makes sense that with the current high precious metal prices, the profitability and market value of most of the companies in the sector has increased dramatically and has the prospects to increase further. Now, you asked, Rob, earlier about my favorite, my top pick at the moment, and I would like to propose...
Just one. Just one.
In fact, it has been one of our top picks for a while in our gold fund, and we have been shareholders for a number of years in a company called Arcana Silver. The ticker is AUN, listed in Toronto, which owns two past-producing mines, predominantly silver-producing. Their biggest mine and the most advanced one is the Revenue Virginius mine in southwest Colorado, which has now, in recent months, has been fully financed and is moving rapidly to production in the next few months. And we believe that it will be transformational for this company to have production and a very, very strong free cash flow generation. But they also own another past-producing mine called Shafter, which is in southwest Texas, which has also updated this preliminary economic assessment recently It is fully permitted, and it is moving forward to raise the financing necessary to restart the mine. So we think it's a company that will benefit from the current strong metal price conditions, with two producing operations in the short term that could contribute very, very meaningful free cash flow.
Thank you very much, and I definitely share your views on the gold. I think on our side, on the Dundee side, I think, as we talked about a little bit earlier, I think we're putting our quote unquote shopping list together. Some of the names on the panel here we own, and I think to sort of dovetail on what you were saying before, I think we've had a consolidation period. I speak to a lot of juniors, and they have varying degrees of frustration. Sometimes they put out results, and at this point in time, they're not seeing the sugar high, if you will, that was happening a few months ago. But that's completely normal. I think just to dovetail, as I said, on the back of what you were saying, a lot of investors are taking notes and are keeping those lists, because as we move through this, likely this presidential cycle in the next 27 days or whatever the time is, whether it's Biden or Trump, I think everyone's agreeing we're going to have a big tailwind for the gold price and the silver price moving through the end of the new year. And I think a lot of the names, as I said before, the names that are a little bit overlooked that are on this panel, I think are going to all have some very good a good push into year end is really what I'm trying to say there. Just on, I didn't really mention it before, but just to say a little bit about Dundee Goodman for just a moment before we kick into the presentations. We're a group of professionals in terms of the capital markets, finance side, but we also have a very, very robust technical group within our group, and obviously we're led by Jonathan Goodman, and we are combing the world, looking for. And actually, it's funny, we kind of used kind of tongue in cheek, said we're combing the boneyard of the mining space. That was what we were saying a year and a half ago, to look for phenomenal value and opportunities. We're still doing that today. A lot of values have come up a bit, but really not more than they would be expected, because that initial bump was just the recapitalization of a lot of the companies, which, as I mentioned, a lot of the companies on this panel did in the last 6 months. I think we're really poised here for the next level, and we're really, really bullish. Probably more bullish right now than we were 6 months ago, for sure, given the lay of the land. So, without further ado, I will stop talking, and I'm going to hand it over to Joe Hamilton to start. But I will say, this panel, the idea of this panel really is an introduction. It's for people who perhaps don't know these stories to get a little taste. They can go do their own work. They can follow up. They can book meetings directly with the companies, go to their websites, reach out to them. So this is very much an entree, and we'll do a little Q&A at the end of each of the sessions here. Keep it to an elevator pitch style, 5 minutes. We'll have some Q&A, and at the end, we'll wrap it up. So with that, I'm going to hand it over to Joe Hamilton. Unigold.
Thanks, Rob. And thanks, Andrew, for setting up this event. 5 minutes, I can probably tell the story in 3 or 4 points for Unigold. So I'll leave that to the end and maybe just pontificate a little bit about some things Angelos was talking about, some things you were talking about as well, Rob.
Please do, please do.
Certainly the gold market, I don't think any of us would be here if we didn't think gold was going up. I think the results of the U.S. election are going to be somewhat meaningless to the gold price. I don't think it matters who wins in the U.S. The stimulus is still going to come. The inflation, or rather the quantitative easing, is going to happen regardless of which party's in power. The U.S. dollar and gold are probably the most highly correlated two assets that are out there. But my look on inflation, I believe inflation has been unquoted for quite some time. Consumer price index. If you look at the Dow Jones or any of the stock markets around the world, there's no question that inflation's gone into asset pricing. The PE multiples have certainly widened in the last few years, and I think inflation is still out there. It's just not in the things you buy in the store. It's in asset pricing. It's in housing prices. It's in gold pricing. It's in bond and stock pricing as well. At some point, the gold price is going to move dramatically. We never see it coming, but I firmly believe that that the gold price will be higher a year from now, no question. As I used to say when I was an analyst, I can tell you the gold price is going to go to 4,000, but I do know it has to go to 2,000 before it gets to 4,000. So I'll just say that it'll probably go through 2,000 by this time next year. The other thing that I've noticed is, new exploration companies, gold cycles have become shorter over time. When I first started in this industry a number of years ago, or rather a large number of years ago, gold cycles sort of lasted 5 to 8 years. It seems with the advent of electronic trading and of course other instruments like ETFs, the gold cycles seem to last about 4 years now. But that's in contrast to how long it takes to actually develop a mine today. With the new ESG guidelines needing to get licensed to operate mines, it used to be that you could take a project from discovery through to production in about 7 or 8 years. Now that number is closer to about 15 years from the time the discovery hole is made until it goes into production. So investors need to be aware that most new discoveries are going to go through at least 2 gold cycles before they get into production. And that seems to be the case now. So that sort of changes the investment horizon as well for people. And I think that's a fundamental shift that we're just seeing now in the market. And I'm sure we can discuss that a little bit later. The other thing that we've noticed the last 5 years is that large companies really want to see projects that are completely de-risked or as de-risked as possible. Very few of the large companies are making offers for mid-tier companies or even exploration companies until at least there's been some form of an economic study done, probably a pre-feasibility study. It's rare that they'll go in and snatch it unless it's pretty obvious that the deposits are large. So it takes a fair amount of time to go through that. So with that, I'll just move to Unigold, and I'll give you the 3 reasons why I think Unigold is an outstanding buy at this point in time. We've been operating in the Dominican Republic for about 20 years on the same piece of ground. It was only about 10 years ago that we tagged into what I would call economic mineralization. Just 4 years ago that we got into the mineralization, I think, that will ultimately form a mine. We've got over 130,000 meters of drilling in this project. It's not we're not a new exploration company. We understand the geometry, and right now we're moving to drill that out towards economic studies, pre-feasibility studies. So it's a fairly good starter pit, and then followed by an underground operation. But the beauty of our mineralization that we found in the Dominican Republic is that it's very consistent. It's got widths up to 30 meters, but it's not narrow vein. It's not 200 gram per ton material that's being spread out over 20 or 30 meters. The 30-meter intersections we get in drill core are very consistent. We put out a press release in August on one drill hole, showed the meter by meter assays, and every meter ran between 4 and 19 grams over that 30-meter intercept. So it's those forms of things that major companies like to see. It makes for mining easy, and at some point, everyone has to de-risk their projects, and that goes beyond exploration. I think we're well down the path in de-risking in Unigold. We're in a country that understands mining. Pueblo Viejo is in the country. Barrick and Newmont are in the country. And Pueblo Viejo is arguably Barrick's #1 mine globally. It consistently provides about 30% of their income from their operations and a large amount of cash flow as well. It's also one of their larger resource reserve bases. If you're going to go to exploration, you've got to be in a country that's exploration friendly. Canada certainly fits that bill, and a few of the other people that are giving presentations here are in Canada. It's a good place to work. But you've got to pick the country, you've got to pick the deposit, and you've got to move on to deposits quickly if they don't have any economic benefit to them, and find a new one. And that's certainly what we've done at Candelones once we got onto it in the Dominican Republic. So, I think the gold market is going to look good. I think it's going to last this time around. It'll probably last for 4 to 6 years would be my call. Where the gold price ends up, well, that all depends on what people feel about paper currency. And quite honestly, there's enough paper currency going out there that I think it should become devalued. So that's sort of my pitch. And there's a couple of points that I put out there that I'd be welcome to discuss with people as we go through this the next 45 minutes.
Andrew, I noticed a few audience questions. Was there one we want to take at this point, or?
Yeah, there was one that came in for Joe, just asking when will your 41-101 be ready?
We will be filing a 43-101 this weekend. We put out a resource update in the middle of August, But that was really just a resource update on the oxide portion of the deposit. We moved that into measured and indicated category preparation for the feasibility study. We will update the sulfides when we finish this round of drilling. We're in a 30 or 20,000 meter drill program at this point. That should be finished by the end of the year or in early January. Following that program, we'll update the resource on the sulfides. The previous resource we put out on the sulfides showed about 900,000 ounces at about 5.2 grams per ton. We've put approximately 30,000 meters of drilling into the sulfides since that resource estimate. So we'll put out a new one early next year. And I think we'll comfortably be over the 1.2 million ounce mark at that point.
Can I ask a question on this? You mentioned that looking to move to some of those feasibility studies in the near term. How much more drilling will you need to make to provide sufficient information to move to the feasibility study after this 20,000 meter program is completed?
I'm hoping we could move to a feasibility study after this 20,000 meters. We had a 20,000 meter program between October and March. We shut it off at 14,000 meters in March when COVID hit. But that program included a fair amount of infill drilling, which we believe moved some of the inferred resource to measured and indicated, which is what's required for a feasibility study. And this drill program that we're on now is looking to step out along strike into depth to expand the inferred resources that we have to give us comfort that that the resources we have now can be expanded in the future and that there's further measured and indicated that's there. So to answer your question, Angelos, we'll have to wait and see till the end of this drill program to see what the engineers will move into measured and indicated category for us. And then that will determine the level of the feasibility study that we'll do after that and how much drilling will be required to move more of it into measured and indicated.
Right. Okay.
Thank you very much.
There was also another question.
Sorry, Angelos, could you just repeat?
I think there was another question from the audience following on Unigold.
Would you take that question now, Rob, or do you want to take it at the end?
I think we'll take it at the end just to keep things moving, but I believe it was ESG related, but we'll save that one to the end. We want to have room for everybody to ask again. So moving on to our next story is Galen, McNamara, Summa Silver. Galen, did you want to take it away? And this
Sure.
is a Nevada-based silver project with an interesting history. I'll hand it over to you.
Sure, thanks, Rob, and great to be here with everyone today. Really interesting discussion so far, and before I get into Summa, I just have really one thing to add. Angelos, you said something interesting about us maybe being in the early innings of what we hope will be a multi-year bull market run for precious metals, and that's a term I use a lot. And for me that means that now is the time to be aggressive. Whether that's with drilling, with exploration, with financing, with looking for more projects. So that's a bit of, as an exploration company and a brand new exploration company, that's a bit of how our mindset is at the moment. So Summa Silver, in contrast to Unigold, we're a brand new silver and gold focused exploration company. The first project is located in the historic, famous Wild West Tonopah district of central Nevada, halfway between Reno and Las Vegas. So Nevada is it's really well known as a famous gold producing state. If it were a country, it would be the 4th largest gold producer in the world or something like that. But what a lot of people don't know is that Nevada is originally known as the silver state. And when you drive into Nevada, the road signs still say, "Welcome to Nevada, the silver state." And that's because of 2 famous Wild West mining camps. One of them being the Tonopah district, which was known as the queen of the silver camps, back 100 years ago when it was discovered. So that's our first project, and that's where we're drilling away very diligently now. Very much focused on these historic districts in the southwestern US, because there's a lot of success stories that go back, throughout the history of junior mining companies where, there's an old adage that says, hey, the best place to look for a new mine is right next to an old mine. So, we're not trying to reinvent the wheel here. I like to keep it simple. especially from a risk perspective. Joe, your discussion about, you know, minimizing risk, I think was very important. So I think from a risk perspective and exploration, that's the approach that we like to take. Okay, so let me just go to the next slide, Elaine. So where are we at right now? We started our first drill program, 7,500 meters, at the Hughes property in the Tonopah district a couple months ago. Have been diligently drilling away on a few target areas. And just before I go any further, we called it the Hughes Project because it was actually formerly owned by Howard Hughes back in the 1970s. And for anybody who doesn't know who that is, if you've seen the movie The Aviator, he was featured in that. Leonardo DiCaprio played him. So he owned the property in the 70s, but it really hasn't seen any modern exploration at all. And the project produced, you know, in excess of 40 million ounces of silver and 400,000 ounces of gold at grades of about 1,250 grams per ton silver equivalent, and no real modern exploration and no drilling at all around some of these old mines. We're the first people to do it. So we've started that now, put out three drill hole results last week. And I can just move to the next slide, Elaine. Thanks. So the first 3 holes, each of them hit grades over 2,000 grams per ton silver equivalent. The best one being 3,760 grams per ton silver equivalent over 2.5 meters. That's just the first 3 holes, widely spaced, different targets. We're testing a broad swath of targets over the entire property as just a first pass to see what we could be dealing with, what could be left here. And I'm very, very excited about the first results. I really like what I'm seeing. You know, I think that the potential here is really good. You know, I look at a project like this that's a high grade silver past producing district, and I start to think, okay, hey, you know, what are some comps here? You know, if we end up having a win, you know, what could be the upside for us? And I kept coming back to a company like Silvercrest, who went into a historic mining district in Mexico, mined about 100 years ago or so, 100 million ounces or so came out of that district. Apply some modern exploration techniques and really take a modern approach to it. And fast forward 5 years, they have a $1.5 billion market cap. So when I was originally looking at this project, you know, I just thought to myself, you know, these are the types of shots I want to take. And it all comes back to risk. You know, what kind of risks do you want to take? And what kind of rewards could you be in for? So that's the very quick overview of Summa Silver. And that's where we're at right now.
Excellent. In terms of, I'll ask the question, in terms of the overall property, I know obviously the first results we saw recently were focused in around the Belmont mine, the past producing Belmont mine, and you produced some phenomenal results. I'm talking, you know, on equivalent basis, multi-thousand ounce over, I think around two to 2.5 meters or so. Now that's around the historic Belmont mine, but are you know, I know you've got some targets spread out quite, you know, in quite a few different spots, I guess, on the property. Can you maybe just elaborate for a second on what can the market expect between maybe now and the end of the year on that front?
Yeah. So those were only the first 3 holes on the first target. There's actually 4 target areas in total over a strike length of about 4 kilometers that we're broadly testing, all of which have, I think, very high potential to deliver grades. Whether it's on the western side of the property where there was a drill hole right next door to us, 300 meters off the property boundary, drilled by another company that was 29 meters of 965 grams per ton, you know, following up that result on our side of the property. You know, that's one other target. Another one is following up on some veins that were mined on only one level that returned grades that were up to 7,000 grams per ton silver equivalent, you know, and never drilled until now. So it's things like that we're really aggressively going after, just to see as a first pass to see what could be left here, so we can come back and really start going at this in a much more detailed way.
Right. Okay. And I guess the kind of the outlier, if you will, I know you've got a hole or two, maybe about a kilometer away, which is kind of the moon. I don't want to call it the moonshot but you maybe want to touch on that one. I think it's the
That's right. So, and then further to the east, a kilometer and a half out to the east on a brand new area, some drilling there that was done by Echo Bay Mines back in the 80s hit some really interesting numbers. You know, a meter of 1,500 grams per ton silver equivalent right at the bottom of their hole, and never followed up. You know, the thing is in Nevada, you know, people always ask me, you know, how come this has been forgotten for so long? And really in Nevada, I mean, for decades, people have been really focused on those open pitable gold deposits, and those are great. Don't get me wrong, those are great targets to go after. But because of that, you know, there hasn't been too much focus on these higher grade vein districts. And I think, you know, a lot of people now, and I'm glad to be part of that group, that, you know, we're starting to show that there's a lot of life left in these places if you take a modern approach to them.
Right.
My question is as a concept, looking at your district and your project, it relates to the theory of marginality versus you know, deep value and ease of processing. You know, everybody's looking at these past producing areas, trying to find the past producing mines that could be resurrected, where additional drilling and modern techniques could add to the resource and make a project economically viable. But obviously we have to bear in mind the risks of the relative economic viability of these projects compared to other that are perhaps cheaper and easier to operate and bring to production. So what is your perception about your projects in your area? Obviously they were shut down and forgotten for many, many years, and no one touched them even through the previous bull market. And I guess part of that was the risk of a higher marginal operating cost operation that could be more difficult to finance and operate in a lower gold price or silver price environment. Now that we are seeing much higher metal prices, these projects obviously can become profitable and can become you know, very much viable. But what is your perception as a relative sort of proposition of your properties compared to other things?
Yeah, you know, I think we're in a little bit of a unique situation for the project in Nevada. The reason that this wasn't looked at in the last bull market was because the people who owned it were looking at it as a tailings project. There's some tailings at surface that have some silver, and gold in it. You know, a very minor amount, but when you own something privately, that's some really low-hanging fruit, and 1 million or 2 million ounces of silver in tailings owned privately can look pretty good if you're just, you know, a few people that own it. Number two, nobody really ever looked at the data. Nobody ever really put all of the historic data back together, did all of the 3D modeling and all the modern work we need to do now to properly drill target things. So that wasn't well understood. We were the first people to do that. So in a way, I guess you could say that, you know, you have to really do the legwork to figure out, you know, if some of these old districts, or if they may have anything left.
One final question for me, and we've got enough time, so we're tracking pretty well. But one final, could you just speak to the ownership of Summa? You've done 2 financings, maybe just sort of some highlights there, you know, and go from there.
Sure. So we've done 2 financings over the last 4.5 months or so. The first one was $5 million at 25 cents. The second one was $8 million at $1, with a half warrant at $1.75. Very strong institutional support in both rounds. And of course, Mr. Sprott took part in both rounds for $1 million at the 25 cent and $5 million at the $1 round. And we're very happy to have the strong institutional support. We've got about 51 million shares outstanding right now. And our stock's trading at about $1.30-ish. So it's been a great start. I mean, we started off here, the first financing was 25 cents. In May, the stock subsequently ran to $3+ during the real excitement of July and August. It has come off a little bit since then, but I think it's still one of the strongest stories, you know, new silver stories around right now. And yeah, I'm just very, very happy to have the strong support, you know, institutionally and from Eric Sprott.
Excellent. Okay, well, thank you very much, Galen. Next up is New Placer Dome. Max Sali, and another Nevada focused gold story. And with that, I will hand it over to Max.
Thanks, Rob. Yeah, we are like Summa Silver. We're a new exploration story. We are very aggressive. Our Bolo project that we're currently drilling is about 45-minute drive away from Summa Silver's project. You go through Tonopah, easily accessible just off a major highway. And I think the best thing about Nevada is one, it's a safe jurisdiction. There's been so much production, and you know how long it's going to take to get permits and to get work done. In terms of us getting work done, the last time I was on this panel, I think it was around Canada Day, we were preparing to drill 2 big projects, Kinsley Mountain, which we raised our big financing for in June, and Bolo. And as of today, we have 4 drill rigs turning in Nevada. I don't know another junior my size or under $100 million market cap that has 4 rigs currently turning. Our financing that we raised about $12.5 million for came free trading on Monday. And so you saw our stock come under some pressure. Like Summa, we had a tremendous run. We ran almost to $1. We're sitting around 30 cents. We've traded about 15 million shares at the 30-cent range since Monday, since the financing came trading. And I think what that does is really gives a new entry point to people, because I think that the overhang of that financing was what was holding us back. In terms of drilling, we have completed, as of next week, 40 holes, 40, and we'll be doing roughly 70 holes, 70. That is extremely aggressive. We have assays at the lab, and it's frustrating for everyone in the space because the labs are so backed up. We have 4 more results on our Bolo project that should be out in the coming weeks, 9 holes at Kinsley that will probably be out mid-November, and a consistent news flow from mid-October through Christmas, through 2021, because we are drilling so aggressively. We are fully financed. I think September 30th, we'll see our financials. We still had over $5 million in cash, and that is not including what our joint venture partner owes us for their portion of the drilling. And so we have the ability to keep our rigs on our property for as long as we need. And as long as we are having success at Kinsley, and initial results show that, we've put in our press release, we are seeing visible sulfide, which is what we're trying to find at Kinsley, is a high-grade sulfide. If we can demonstrate that we can find more of these high-grade pods on the property, we can just keep the rigs. The nice thing about Nevada is rig possession is 9/10 of the law. And I think that's important, because as long as we have a rig, we can just keep it on the property. And so for us, being in this bull market for gold, with an asset like Kinsley that had a peak market value when it was sitting in pilot gold of $250 million based off of the drill results, it really allows people to look at us now and say, there's no overhang of a financing. Everything's free trading. You can go in the market and pick up a nice sizable piece of the stock. And within the next 4 to 6 weeks, you're really going to see what our Kinsley asset can do. And I truly believe that Kinsley will show some significant grades and numbers. And I think it's a very exciting time to be a junior miner and to be in the space. And so we are a very aggressive company. We are cashed right up, and we will be delivering consistent news flow drill results weekly to the shareholders, showing what our assets can do.
Max, can I interrupt you? But it's totally relevant and related to what you were just saying. We actually have an audience question, but it's sort of a question I would have asked myself. Regarding Kinsley, the question was, when are you going to be drilling? I think they say Secret Canyon, but is it Hidden Canyon, Secret Canyon, something Canyon? You'll know what I mean.
We are drilling. We are drilling Secret Canyon now. We have 3 rigs. We have an RC truck, an RC track, and a core. And right now the core rig is on the Secret Canyon. We are upgrading some of the inferred indicated. We also have a truck RC, which is just doing pure exploration on the project, trying to find more of the Secret Canyon shale zones and other parts of the property. And the RC track rig is currently drilling the Secret Canyon shale. So we have, to date, as of last Thursday, we announced 17 RC holes and 5 core holes complete on the project.
Right. And just for, I guess, for people who are a little bit less familiar, perhaps just describe Kinsley, and then Secret Canyon's like a high grade pod a little bit deeper down that historically it had some good results. Can you just elaborate?
Yeah, so
maybe?
Kinsley Mountain comes with a resource of 535,000 ounces. There's a high grade section of over 6 grams per ton, 300,000 ounces in the Secret Canyon shale. When Pilot Gold drilled this in 2013-14, they were hitting grades like 43 meters of 11 grams, 23 meters of 18 grams. These are Kirkland Lake grades in Nevada. This is a non-refractory sulfide. We've done the met work. It floats. It floats a very nice concentrate, 89 to 95%. This is a very special project because what you could do is with a bigger resource, and even now it's economical because of the grade, is you could build a small concentrate plant on site and then ship that concentrate to a nearby mine, like a Long Canyon, like a Jarrett Canyon, like a Bald Mountain. And so I think with the results coming out on Kinsley, we're really going to see the potential of this asset. Only 20% of the property has been explored. We have a number of targets picked out. And like I said, we have 3 rigs turning right now. We're completing holes every day almost on the project. And we are almost to the percentage on budget. And so that's a really testament to our team. You know, we have some of the best geological people on the project. We are proud to say that we have the ability to use Liberty Gold's technical team, which is our partner on this project. And so it's a great project. We've had the best eyes looking at it. We really think the project was just looked over for a period of time, and here we are giving it the best possible shot we can to deliver the best possible value to yourself, to the shareholders.
Thank you. Angelos, did you have any follow-up question? I know there's some other on the line, but we got to keep it moving.
I wanted to ask, in terms of timing, obviously a resource upgrade would be a major catalyst because people are waiting to see what would be the likely increase in resources. What is the likely timing of bringing out the resource upgrade?
So following this drill program of about 20,000 meters, we think we can upgrade the current resource probably about 25%. What we're really trying to do is find more of these high-grade pods on the property, and that will globally add ounces very, very quickly because of the grade. So following the drill program, I would say 2021, we could do an upgraded resource on the Secret Canyon shale. But what we're trying to do is find more of those pods in other parts of the property, and I think that's where you're going to see the value from us.
Okay. Well, obviously, I guess in summary, there's a lot happening, number one, and a lot for the market to look to and digest as we move into the new year. And as to, you know, Angelos's very relevant point, getting a resource update at some point in 2021 would be a major catalyst for the stock. So, you know, at these levels, which is around the same level-ish that you financed about 6 months ago, it's a great time for people to be looking at it. For now, we'll move on, and then we will come back at the very end. But Mark Ashcroft is the CEO of Aurelius. Take it away, Mark, and we've got a lot of questions coming in, but we want to get to those, so we'll keep it punchy.
Thanks, Rob. Oh, great. There we go. Yeah, thanks very much, everyone. Really appreciate the opportunity to spend some time with you here today. Really, Aurelius, the opportunity in Aurelius is Canadian focused. We have 2 distinct asset bases. What I'd call the primary asset base is the Aurelius Gold properties in Nova Scotia. And then we also have our Ontario properties that we started with originally. The opportunity in Nova Scotia is what I'd like to really focus on. If we can flip the page, Elaine. Really what we were able to do here is we were able to acquire a permitted asset. It's a 300 ton per day mill. There was underground development and 3 other gold deposits with current resource. So we were able to acquire a mineral inventory within Nova Scotia. We've been very fortunate, as Rob said. We were able to add value or add to the treasury. In July, we raised $4.5 million. We've established a 10,000 meter drill program, 6,000 meters underground at the East Mine, and 4,000 meters ongoing currently at the West Project. And ideally, what we're on a path to production. And we're going to get to that path to production by focusing on 3 simple facts. We're going to define, refine, and re-engineer. And the goal there is to define resources. We want to define resources at depth, along strike, and laterally at the East and West projects. Eventually, we'll want to drill those off into reserves. And all the while, we're going to be working on looking at economic studies and the engineering to make sure that we understand that not just the geology, but the geometry and how we can efficiently extract those ounces. If you can go to the next page, please, Elaine. Really, this is our sort of program that we're going to outlay to people. If you can flip the slide, please, Elaine. Yeah, and I think really this is where the opportunity lies from a sort of discovery potential. This is a 1 million ounce target that we have. Back to that last slide, please, Elaine. This is really a multi-million ounce opportunity here. What we're doing is we're drilling from an underground location at the East Mine. We're starting about 170 meters of depth, and we're extending that mineralization through. And you can see that we actually have our current our third hole in progress right now, and you can see the extent of that depth. The red shading above that extent of previous drilling identifies the mineralized saddles that have been previously identified and in some cases developed. But I think one of the key takeaways and the advantages we've had at this asset is that when we took the assets over, we discovered almost 2,500 meters of historical core that had been drilled but had not been sampled or assayed. And we've really, really been able to develop an understanding of the mineralization and the geology here that prior operators weren't able to do. And it's, I can't explain why there was 2,500 meters of drilled core that wasn't sampled, but we've certainly benefited from that, and that certainly helped guiding our current drill program. And really, that's the opportunity here for the time being is we've been able to release those assays from both the west and the east projects. We've seen significant high grade intervals, 62 grams per ton over 3.5 meters. We've also seen very distinct and much broader mineralizations over 20 meters of 2.5 to 3 grams, which is very significant for us because the big story in Nova Scotia as of 2019 was Atlantic Gold, which was taken out by St. Barbara, and they totally transformed the thought processes on mining in Nova Scotia, which was traditionally underground high-grade deposits, to much broader, larger, open pit opportunities, and so that's really where we've been able to benefit off the back of that. So we're currently drilling 10,000 meters. We should expect to see some of our first assays from 2020 by the end of October. We're fully funded to complete this 10,000 meter program. We have about $3.5 million of working capital at the moment, and we're in pretty good stead to continue on from there. Rob?
Yeah, no, did you, one thing that obviously, like all of the stories we've talked about, recapitalizing these companies and so forth. Maybe just touch on some of the new ownership and sort of what the registry, broad brushstrokes, looks like now, and some of the people that are committed to the long term, because I know we've chatted a bit about that, having some supporters that are really sort of going to take you there over the next couple of years. I think that's an important part of this. And maybe, and may I add as well, just how this asset came into you guys, and a little bit of background there, if you don't mind.
Yeah, no. So I've had a long history with the Sprott organization. This particular asset came out of Sprott Resource Lending. They had exercised security over on a debt loan they provided to the prior operators, and so they owned the assets. They were looking for an exit strategy. They really liked the geology, and I sort of said, listen, let's have a look. Let's we can talk to you about maybe potential opportunities or what you could do with it. That conversation then became, why doesn't Aurelius and its technical team take over these assets? So we agreed on a deferred price payment program with Sprott Lending. We have to make a payment of $2.5 million US once we establish a 43-101 with 500,000 ounces of measured and indicated, 90 days after we publish that 43-101. And then the balance of the payments, 5.7 million, is 1 year after we publish a 43-101 feasibility study. So they're strictly success fee-based payments. And the other thing in truly the partnership element for us was that these were tough times. This was November of 2019. We still hadn't seen the rise in the market interest. And so we actually got an equity undertaking from Sprott Resource Lending, where they actually invested $1.6 million into Aurelius at 6.5 cents when the market was sort of 3, and they owned they had 19.5% ownership at that time. They're currently at about 15.5 after our most recent financing. They will get topped up. Along with that financing, we were very fortunate to bring in the support of Goodman, Dundee, and Jonathan, and that crowd. They participated in both hard dollar financing and flow through. We also Rob Cudney of the Northfield Capital Group came in as a strong supporter, and we maintain that ownership and the relationship with Sprott. Management's a very big management has significant ownership. We participated in pretty much every financing thus far. I personally own 4.75 million shares, so we're aligned with shareholders, and we certainly want to see this advance, and that's how we're going to realize value as we advance these assets for our shareholders.
Excellent. Angelos, did you have any final questions for Mark? Or
no, very interesting story. The question is, what is the likely timeline now, as a result of this 10,000 meter drilling program completing? What are the next steps? You mentioned about updating a feasibility study. How long will that take?
Yeah, I think right now we're focusing in the next 18 to 24 months. This is a drill story, Angelos. The reality is, I think even what we've discovered in the last 6 to 8 weeks, now that we've been able to establish a team on the ground. Remember, this all happened during COVID, so we had to really start from scratch and build a team. We now have 5 geologists on the ground, 3 technicians, a general manager. So we've really built that up, and what we've been able to discover is certainly the mineral potential here now is much greater than we initially thought. We knew it was going to be very good, but now it's going to be, I think it's even going to be better. So I think the next 18 to 24 months is the sort of target we've put on to make a decision as to, our any engineering studies and the work. But really, this is a drill story, and really grow the asset base on an ounce perspective, and certainly start trying to tweak what that strategy is to move forward, whether it's what style of development or operation or production.
Yeah. And what do you think went wrong with the previous owners? Obviously, to raise lending financing for a project meant that they had hopes for a fairly short time frame to feasibility and possibly production. What went wrong in the thought process in their story?
Well, I think it's always hard, to understand what was going through. But let's be blunt: people were very starved of capital at periods of time, and so you had to make decisions to try to, at times, maybe higher risk decisions to try to advance cash flow. And I think they just didn't have the luxury of time or capital, and they had to make some decisions that resulted in them not delivering the ore grades to the mill that they were expecting. There's 3 key things you care about. Geology is very important. Geometry, and Joe mentioned that in his. How does that geology actually lay underground, and how do you actually extract that mineralization most efficiently based on that geometry? And that's key. And if you don't understand that, that you very often fall down. And the reality is understanding the chemistry, the mineralogy. How do you get that gold out of the ground? So I think it was a function of not enough capital or time.
I'll stop you there. Thank you very much, Mark, because we do want to have a little time, an extra 5 minutes or so. Andrew, I know we had the ESG question related to Joe's project in Dominican. Did you want to just touch on that one?
Yes, so I think the question for you, Joe, was just what are your primary ESG commitments in the Dominican Republic?
Yeah, I answered that in the chat room, but I'll give you a verbal at this point. We're just now starting community consultation processes in the DR. We're putting together a sustainability framework there in conjunction with the community and the government. Those commitments will be laid out in a mining license when it's eventually granted. It'll be codified, what percentages go in. But what we do know at this point is for Pueblo Viejo, for instance, Barrick and Newmont contribute approximately 2.5% of their income into a community fund. The government matches that with tax revenue. So about 5% of the income from the mine goes out to the local community, and it's administered by a council set up community leaders, government leaders, and the operators as well. So those kind of frameworks today, without a social license to operate, no one's ever going to build a mine. And I think Mark Bristow at Barrick probably said that best over the last year, that it's got to be a win-win for both the governments, the communities, and the mining companies. And so you've got to do those consultations, and you've got to be transparent through. I know we will certainly do that. It's best to have the communities on side before you start spending money on a large plant or very large capital items. And you can never start those community consultations too early.
Thank you. It's becoming a little bit of a lightning round now in terms of some of the questions, but one is for Mark Ashcroft from the audience, and it was, how's the geologic setting of your project similar to Fosterville's? I don't know if there is an analogy there, but I'll let you try.
Absolutely.
To answer that one.
Absolutely, that is the analog. The entire reason the Australians first went into Nova Scotia in the 80s was based on the Bendigo goldfields of Victoria. And so you've got these occurrences of these saddle reef structures, and then you're also got the opportunity to investigate where the source was for the enriched fluids that came up and populated the these reef systems. So that's exactly, if you look at all of the literature in Nova Scotia, it's all based on the Bendigo goldfields of Victoria, where Fosterville's hosted.
Thank you very much. Andrew, is there any more questions that have popped up?
I think that's all the questions there. I think we've actually answered. Actually, there's just one last quick question in for Joe, asking what is the corporate tax rate like the Dominican Republic?
The corporate tax rate in the Dominican Republic is 25% income, with standard deductions, depreciation, inflation. But in the Mining Act, the income tax rates are actually set when the mining license is granted. The mining license is granted for 75 years, and the tax rates get reset every 25 years. So you have some fiscal stability once the mining license is granted. There is room for the government to move the tax rate up or down, but it's fixed once the mining license is set. And when I say move the tax rate up or down from 25%, the government doesn't want to kill a project based on tax rates. They want to ensure that while the government gets their fair share, the project can go ahead and provide employment as well. So the corporate tax rate, at least for mining projects, is somewhat negotiable. But of course, most governments these days want to have some upside to rising gold prices and some larger participations or larger in the operation. So those, while I can say the government's very reasonable about it, it's really during the mining license that those tax rates are set. And quite frankly, the government in the Dominican Republic has said repeatedly most governments are
Thank you.
in their country, includes income tax, etc. So
thanks, Joe. I don't mean to cut you off, but you're also having a little bit of technical difficulties. I don't know if that's common to everybody there, but Andrew, I think we're gonna sort of wrap it up. We're getting close to the time, but I just wanted to say on behalf of Dundee Corporation, Dundee, Goodman Merchant Partners, a big thank you to Mines and Money for obviously having us on this event and obviously to sponsor it. I would like to thank all the CEOs who participated in this. Joe Hamilton, Unigold, Galen, McNamara, Summa Silver, Max, Sali, New Placer, and Mark Ashcroft from Aurelius. As I said at the beginning, we're pumped up. Like, we're excited. This is what we've all been waiting for the last 8 years. And yeah, we've had a nice little run into the spring and summer. We've had a pullback, which is totally normal and natural as it consolidates. We've got a thing, of some news on the horizon to get through, but it's a time that, this is the analogy I always think of. This is like 2002, 2003 right now, if you think of the last decade or the decade before that, I should say. So it is a time to be doing your homework as investors. And these stories, we're excited about, and they're early. We think they're completely under the radar still, even though there's been some significant investment made. And what can I say? I mean, you heard it from Angelos, who, by the way, I'd like to thank as the institutional investor on the call, outside of ourselves. That we're bullish, and this is an exciting time to be in the mining space and invested in these companies. And please reach out to all those CEOs directly via their the representatives. Go to their websites basically. So with that, Andrew, I'll hand it over to you, and thank you very much on behalf of Dundee Goodman Merchant Partners.
And many thanks to our guests, to our sponsors, Dundee Goodman, to our panelists, and also to the audience as well. I'll see you next week, which will be also brought to you by Dundee Goodman. In the meantime, for those of you in Canada, have a great Canadian Thanksgiving Day on Monday. Thank you very much, and bye.
Be safe.